I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in Vancouver in January, and I'm joined by Justin Reid of Troilus Gold. Thanks for being here.
Thank you. Good morning.
So you have a big news event coming up. There's this feasibility study that Troilus has been pushing towards for feels like a long time, because you pushed out the date of the feasibility study by an entire year for a good reason, which is that your drilling was returning such good results in terms of bolstering the resource that you decided you needed to incorporate. You needed time to do all of that. So you can't talk about the feasibility study. It's not out yet. Talk about the shape of the resource and how much that's changed and what that's going to do to the strip, sort of the economics and the scale of mining.
I think a few big things. We did put out a new MRE 2.5 months ago, and it was
huge.
Yeah, it's 13 million ounces equivalent across all categories, 1.2 million or 11.2 million indicated, which is great. The real takeaways from this, though, is it's huge. We know there's a lot. X22, which is delivering good grade, 87 and J have become one pit.
They used to be separate things side by side.
Exactly.
Now they're like,
100%. And so think of the average strip ratio as like 4.1 to 1. You have these individual pits that you had to go mine, get rid of the waste, and get to the ore. They've expanded so much through this drilling, they're now one super pit. It's kind of like 3.5, 4 kilometers long, 2.5 kilometers wide, and it'll push down to maybe almost 700 meters.
Huge.
But what this does is it allows us easy access to the ore. Strip ratio drops by 25 to 30%. When you're talking about $3 a ton to move waste, and we're talking about 35,000 tons a day into the mill, so you're moving 100,000 tons a day, it matters a lot. Also, X22, 87 South, and the connector zone, which is the saddle between two of the pits, we've identified through really drilling last year, real high-grade opportunities. And so the discovery of X22 was 45 meters of almost 5 grams from surface. The connector zone was 178 meters of kind of 2.3 or 2.2, something like that. And 87 South is running upwards of 2 grams in places. So I'm not saying we're going to put that grade through the mill, which would be great. But what it allows us to do is selective mining at very accessible areas early. And at 35,000 tons a day, the whole key to these low-grade bulk tonnage deposits is repay your capital as fast as humanly possible. So if, our cutoff grade is 0.3, but say we're mining an average of 0.7 or 0.8 grams, right? Malartic's running 0.4 now, Detour's running 0.5. But if we could put a gram or better, which is our goal, through for the first 3 to 5 years, you're going to produce probably over 500,000 ounces equivalent for that period, which is incredible.
Massive.
But more importantly, you repay your capital quicker. And you drop your cutoff grade, you push tons, and that's why Malartic and Detour are the 2 most profitable mines in Canada right now.
Okay, that's a really good stage setting for this piece of news that's going to be out really soon, from what I understand. Let's talk about some parallels here. So Troilus is trading today at 130 million market cap, roughly, for a huge resource. I mean, there's lots of ways that you can look at that where you're like, that seems really cheap. Yes, there's a big capital cost coming. There's a big, there's still a time frame here. You still have to do the permitting, which shouldn't take too long. This is Quebec and brownfields, so there's things yet to come. But at the same time, there's a really good parallel here in British Columbia of a mine that is now half built in Artemis Gold. So take us through that parallel. By the way, Artemis Gold is currently valued at 10 times what Troilus is valued at.
And listen, Stephen Dean's done a fabulous job, and he did a great job at Atlantic as well. They bought the Blackwater asset. Right? It was drilled out, it was studied, it was understood. In fact, many of the mine plans they're looking at were discussed by New Gold previously when they had it. It was just the wrong time in the market for New Gold. They got a great price and did a very, very savvy deal. But the resource was done. Took the feasibility, redid it, made it better. EIA permitting, a lot of hard work, got it done. Financed the mine. And they're 50% construction. Now, they're starting a little bit smaller, and they're starting significantly higher grade, because that ore body is amenable to higher grade, 1.5, 1.8 grams early for kind of 3 years. But they've done all that really great work in de-risking over the last 2 years.
Yeah.
Troilus, same ore body, same size, slightly higher grade. In Quebec, brownfield site, so there's a few benefits there. We spent the last 4.5 years getting to that point.
Yeah.
And so
To their
for
starting
us,
point.
for sure. And so we had to fight a lot of different markets.
Yeah.
The cryptocurrency, blockchain, lithium, uranium, now cannabis. You know, for the marginal investor, there were a lot of distractions. Let's put it that way.
Let's put it that way.
So right now, here's Troilus with pretty good cash in the bank, $18 million in the bank, another 13 coming in, and we have a small revenue stream. Our feasibility is coming out shortly. We're 8 months into permitting.
Yeah.
Our detailed project descriptions were put in 8 months ago. Terms of reference are done. Consultations are complete. Stantec's hired, and our EIA will be submitted May, June, ideally. And then the other permits flow on from there. We think we'll be in a great position to have a provincial permit towards the end of the year or early in 2025. Federal permit in parallel, though less important right now because of this Superior Court or Supreme Court ruling. You still have to keep them engaged because you never know what can happen, but well under control. The resource opened a lot of eyes to people. The feasibility is opening a lot of eyes to people who are, you know, appropriately restricted. And I think that we are in a great position that over the next year as well, while we're waiting for those permits, we'll be exploring and we'll have news flow. But to put a project financing proposition forward, whether it's 100% us or 50% us, but all of those great things that Artemis delivered, we're delivering, we hope to deliver in a way better gold environment.
Yeah.
Right? And with 13 million ounces equivalent, we are the levered name. And we're going to see some success from others like us. You know, Equinox and Orion at Greenstone are about to pour. Cote, after everything they've gone through, IAMGOLD and Sumitomo, they're about to pour. You know, we're going to forget very quickly about the sins of the past when you start making real money.
Yeah.
Partnerships are the name of the game. It lowers risk, it lowers cost of capital. We just saw Cisco partner with Goldfields as well at Windfall. Yeah. And so there's kind of a playbook out there that in this inflationary environment, with the big capex, as everybody's saying, that the risk is being spread out.
So clearly partnership is one of the likely paths forward here. Talk about the kinds of who you might be talking to. Obviously, this is a huge gold project. I get it. It's also a copper project. Yeah. So talk to me about sort of like who's interested. I mean, you can't reveal your cards, but I'm just curious about those conversations.
I think you've seen almost all majors in the precious metal space start to diversify and or change their commentary around looking for copper exposure. Barrick being the leader, right?
Absolutely.
Newmont's there as well.
Instead of wanting to be only gold, they 100%. Actually actively want to also be copper.
For sure. Yeah. And you know, we're going to produce about 55,000 tons of con a year, which on a pound equivalent is like 35 to 50 million a year, depending where we are. Not a huge number, but it will be the largest copper producer in Quebec. Right. And so it's a nice hedge when you see that the electrification argument is still in everybody's face. Yeah. We're talking about nuclear power, we're talking about electrification and lithium. Copper is in every single discussion and has to be, not only from components and batteries, but also the replacement of the entire US grid, if you listen to Friedland, which I do. So I'm a big bull on copper, and then we're kind of related to the issues at Cobre Panama because Inmet got taken over by First Quantum for Cobre Panama. Troilus was a remnant spin-out that we were able to get. And, that's the 6th largest copper mine in the world that's sitting idle right now after $7 billion being spent on it. I know. And not very many years of operation and then no clear path to restarting that. The opposition is very significant. The way it was shut down is like Supreme level court stuff. This is, It was a socialist movement that just shut it down. Yeah. And First Quantum had no moves. I believe it'll be resolved. I really do. Okay. But it's going to mean giving up something. right? You're going to have to come in and cut a new deal.
Yeah.
Or the Chinese come in, which
Yeah.
which happened a lot in the Congo,
Yeah.
right? When First Quantum left there. But to that point, you look at the mandates that have been given by the Canadian government and by the Quebec government, and as they pertain to critical minerals and specifically copper, we kind of have the best of both worlds here, right? Very happy with the positioning of the gold space for the foreseeable future in the current economic environment and political. And copper is just an underserved market.
Yeah.
And you give a great update on that in the sense that they're at the show me stage now. And I think whenever this many people are talking about it, we'll see it. And Cobre Panama just showed it to us.
Yeah,
right?
yeah, absolutely. Well, I as much as some people might look at the next year for Troilus as a boring year because it's permitting and it's a feasibility and it's financing, I mean, I think the conversation that we just had shows that there's lots of exciting things that could also come out. And this is, like you say, the 2-year time frame where you go from that, okay, we have this amazing resource and feasibility study through to, okay, let's be building this thing, this massive new mine. And that's, that's where the golden runway starts, right?
Yeah, it's about validation now.
Yeah.
Right. And it'll be a lot of work. And then we'll still be exploring. We have high grade targets that we're selectively exploring. We just spun out this asset in the Yukon to the old Kaminak team.
Right.
To Prospector Resources, which is, I'll tell you the truth, we forgot we had it. It was in a shell. It was in the shell that we put Troilus in 5 years ago.
Oh, hilarious.
$100 million had been spent on it by Dynamite Resources in 2004.
Oh, gosh.
Right between Victoria Gold's deposit and Snowline.
Okay.
And, I think there's 30 meters of 7 grams already drilled.
Interesting.
Rob Carpenter, the man behind Kaminak and the Discovery Group, we sit on a board together. He said, I'd like to buy this and put it in Prospector. And I said, are you going to be the guy? He said, the Kaminak team's going to be the team. They're raising $2 million now, it's done. And Troilus will have 20% of that company post-deal.
Oh, fun.
So, it's kind of non-dilutive potential financing in the future. And we have 55 assets in Troilus right now that we've never talked about. And
I had no idea that you had 55 assets in Troilus.
Through the purchase of Urban Gold and some of the deals we've done with O3, we just inherited portfolios. And so our geologists now that we don't have 7 drills are quickly looking at the opportunities there.
Yeah.
And I think you'll see some interesting monetization events coming out.
Cool. And that's been an opportunity that's worked out well for you in the last year already in terms of putting a bunch of cash in the bank from non-core assets in clever ways.
Yeah, we sold 1,000 kilometers of Sayona lithium.
For $55 million.
We did. And that ran the company for the last 2.5 years almost.
Amazing.
And the way we look at it, it saved our shareholders shouldn't be happy right now. I'm not happy because the market's been so bad, but we saved probably 150 million shares of dilution, and we were able to keep the pedal down on our development.
Absolutely.
So yeah, it's going to be a fun year.
Cool. I look forward to keeping up with the news. Thanks.
Thank you.